everyone, this is Rob Roy and welcome to the Elliott Wave Options S&P 500 US market update. Well, there's an important consideration in the market right now, and that's the word rotation. I'll talk to you more about that in a second. Another important thing is today's the first trading day of the month. Typically that's a fairly bullish day because that's when institutions put new money to work. As money goes into mutual funds, IRAs, 401ks, etc., dollar cost averaging type plans, the money gathers up throughout the month, and usually those money managers put it to work on the first trading day of the month. So with all that to think about, let's look at the charts. And if you're new around here, don't forget to subscribe and give us a like. You'll get the latest US market updates as soon as we post them. At the time of this recording, it is basically 1 a.m. on Monday night / Tuesday morning, and the futures at this point are down 12.5 points, so forecasting a slightly lower open if they hold into the open tomorrow morning. The market continues to move to the upside. We do have this gap right here that hasn't been filled yet. Is that going to get filled sooner rather than later? It will get filled, just a matter of when. But as far as right now, the market continues to move up on this path with the 10-day moving average. I like the 45-degree angle when the market is in a directional move. Those are the ones that tend to hold a bit. Boy, with everything that we have going on, the civil unrest in addition to the coronavirus worries, that mountain of worry that the market is climbing that we featured in the last recording just continues to get bigger and bigger. But at this point, the market's moving higher. I thought I would go ahead and label exactly where that 78.6% level is. I've been pointing it out in the previous recordings, but there's a number. Been mentioning it's right at 313. We are getting awfully close to the market hitting that level, which would then disqualify this downward zigzag potential, and it would be, this would be a completed zigzag here, that would be a completed zigzag there, and then we would be starting to form some sort of a new move and let the market tell us where it's going to go. Well, we pretty much know where it's going to go. If we hit this 78.6% level, according to Elliott Wave rules, we go back and retest the highs. A lot of people are saying, how can that happen? The market's going to do what the market's going to do. So quite often it does the thing that seems to be the least plausible, but that's what the rules state. So we get here, then we continue to move to the upside. We've got a lot of bullish trades on for our subscribers. We still have the bearish spread, but if we hit that, we'll flip it and follow along with what the market tells us. I did want to show you the VIX because that's interesting as well. You can see this big triangular pattern that we've had, but we also have kind of this smaller descending triangle here. That's getting awfully close to that kind of launch pad type of a formation that I talk about, where we have lower volatility and a real sideways pattern. And by the way, kudos to SpaceX and the crew of Dragon with a spectacular launch that we had on Saturday. Being on the Space Coast in Florida, we're really proud of everybody involved in the program and how well that went off. It's great, gives us a lot of pride here. But here's the set of lower highs. So we have this descending triangle pattern. So is it going to be that blast off to the upside with volatility? That would indicate a more downward move in the market. Or are we going to break out of this pattern to the downside and fill this gap that's been looming in the VIX? We've got room to move either way out of this triangle, but based on that formation, that's a pretty nice looking descending triangle. So I'd say we're going to see some sort of a breakout of that pretty soon. Now in the intro, I mentioned that we're looking like we're in a period of rotation. So let's take a look at what I was talking about. Here is the XLK, which is the technology ETF, and you can see that's clearly been moving to the upside. We look at the DMI, hasn't been a whole lot of strength behind it. I mean, the ADX has not been really very impressed with the move, but nonetheless has been moving higher. So even though it's not been moving up with a lot of strength, it's still been moving to the upside and awfully close to closing and filling this gap right here. You see, just within a whisker of actually physically closing that gap. And the Elliott Wave pattern isn't showing anything specific, so this is a corrective move that's occurred here, or an impulse move, if you will. And so going back and finishing that gap, is that the end of the move? Well, a couple sectors that haven't been performing as well, which money seems to be moving into, that's that rotation. And if you are bullish on the market and you're looking for a continued move higher and something that could propel us up to retest those highs, rotation is what you want. You want to see the money moving around. That means money is still coming in, money is still wanting to be involved with the market. And usually when they see a sector that's kind of matured a bit, like maybe technology that led this move to the upside, they start looking for areas where there could be further moves that haven't performed as well. And we have the industrials here with the XLI. You can see that is starting to get a little bit of interest out of the ADX. We haven't broken above 20 yet, which is an area that I tend to watch, but it's clearly moving to the upside, and there is separation between the two directional indicators. And then we also look at the financials, kind of the same type of look. And boy, talk about climbing a mountain of worry or the market doing something that's probably least plausible. The financials performing well with rates as low as they are and forecasts based on the Fed fund futures to potentially move negative by the end of the year. You wouldn't think that the financial sector would be performing very well, but money seems to be moving in there. And when we look at the DMI, the ADX isn't quite as interested as it was in the XLI, but it is ticking to the upside, and we're not too far away from that ADX breaking above 20, breaking between the two directional indicators and giving a signal that, at least based on that indicator, looks like we want to continue. If we look at the Elliott Wave pattern, it still has a qualified downward zigzag pattern, but remember, if that wave 4 moves up too far, the pattern becomes disqualified and then we move higher. And this move to the sideways here is not really a typical corrective type move. Normally you want to see some sort of a zigzag or triangle, not this kind of flat. Now, technically a flat is a corrective move within Elliott Wave. It's just not one that I like to trade or follow along too closely with. It is technical Elliott Wave, but that's what's going on. It's pretty much, if you want to know what flats look like, there you go. We had this tiny triangle here. Look at that. Even these little triangles we get breakouts from. That's why we like the triangles so much, especially in our volatility portfolio with Elliott Wave options for our subscribers. But there's your flats. So A, B, C, and looks like if the DMI continues, that we could be breaking out of that to the upside. We're not there yet, but it's stuff to watch in the coming days, especially if the market does make it up to the 78.6% level and violate that downward potential zigzag. The dollar's starting to move as well. We'll analyze the dollar and the financial markets a little bit more in the next recording. Hope everybody's been well. Look forward to talking to you again soon. Take care, everybody. If you like these recordings, I'd like to invite you to join our new Trade Finder Live, where each and every week we do a live webinar where we talk about the market, but we also go a little more in depth into the technical analysis system that we utilize to forecast where the market's likely going to go, and also to identify trading opportunities. Get your free subscription today. Take care, everybody.